Welcome to the Future Beef Show, produced in partnership with Drovers and Breeder. This is the #1 podcast for progressive ranchers and feeders looking to run smarter, more profitable, next-generation operations. I'm your host, Jim Johnson, from the Brands and Barbed Wire podcast. I'm joined today by Dr. Jessica Sperber, PhD in feedlot nutrition, and Ian Wheal, founder of Breeder, the cattle tech company helping producers raise, track, and trade high-performing cattle. Today on the Future Beef Show, we're joined by Patrick Linnell, Director of Market Research at CattleFax. Raised on a Red Angus cow-calf operation in Oregon, Patrick now leads the analysis and interpretation of data shaping today's beef markets. We dive into the industry's new normal, from market disruption and the rise of beef on dairy cattle to the evaluation of data, forecasting, and what it all means to producers moving forward. This episode is sponsored by Corteva Agriscience. When weeds and brush get in the way, you'll find the solution at rangeandpasture.com. Well, we're joined today by Patrick Linnell with CattleFax. Patrick, welcome to the Future Beef Show.
Yeah, thanks, Jim. Thanks. Appreciate you guys having me here today.
Yeah, we're looking forward to it and learning to see, how long these cattle prices are going to stay where they're at and all that good stuff. I think all of our listeners will be interested in that as well. So, Patrick, for the folks that may not know who you are, tell us a little bit about your background, your maybe history as far as in the cattle business and background before you came to CattleFax.
Yeah. I'm, again, Patrick Linnell. I'm the Director of Market Research at CattleFax. So in that role, I kind of put together a lot of the nuts and bolts behind the moving pieces of the market, looking at just all the information and data that we look at and kind of building that fundamental vision for the market, and then really just tying that in with, does that match the story, what we're hearing from producers, and helping work with our team to then communicate that back out with all of our producer membership. Myself, I grew up in Northeast Oregon. My family I have a commercial cow-calf and a little bit of a registered Red Angus background there, which we're still involved in both of those. The registered thing, it's kind of a little bit of a 4-H project that never died, if you will. Mm-hmm. But I went to Colorado State for my bachelor's, did the judging team deal there, meats and livestock judging, undergrad in animal science and ag business, and then rolled that into a master's in ag economics under Dr. Stephen Kuntz, working on fed cattle markets and price forecasting with him, which the main lesson from there is that price forecasting is kind of hard. But
I thought you were going to tell us exactly what was going to happen in the next 12 months.
We'll get into that.
Yeah, okay.
We look forward to
it. From there, I jumped straight on board with CattleFax, and have been there about 8 years.
How did you end up in Washington?
I had an opportunity with my wife's job, and then to get back closer to home with family.
Okay.
So we made the move back that way about 3 years ago, and it's been great. Just to be back closer to family, spending more time there with them and at the ranch and that kind of stuff. Yeah, spent about 5 years in our Denver office before that.
Okay, fantastic, and got a newborn, and
yep.
Loving all the things that come along with that.
Yes, exactly. That's been a big new adventure.
Great.
Go for it. Well, Patrick, it's really good to have you here, and I think we're trading cattle all the time and feeding our own and stuff like that, and obviously the last few years have been an amazing ride, and when we started the business, like, beef was not the darling child, I don't think, of the protein that it is now. We've always, you hear the term the new normal, and everyone's like, no, it's just another cycle. Like, give us your perspective. Are we in a new normal? Like, is there something different this time that we didn't see in the last cycle? And, what are those differences? And, it will come back, but it'd be great to get your perspective.
Yeah, and that's so true, Ian. I mean, the markets are phenomenal. There's no way to deny that, or no other way to look at it. As far as where we are going forward, one of my favorite sayings is that history doesn't repeat itself, but it does rhyme.
Yeah.
And so I think that's really, I think, the foundation for how we look at the markets going forward, is that we're still going to have a cattle cycle. At some point, numbers will come back. Prices will be lower than they are today. That's no different. But there are a lot of very different factors
Yeah.
that really are going to shape the industry and shape the trends going forward. And I think the key one that you hit on, I mean, is that beef is a darling child.
Yeah.
That the demand for beef is just phenomenal. It's really hard to make the case for beef demand to meaningfully come down. I mean, unless we start talking about, I mean, a severe recession, or I mean, make another case for why the consumer is going to start saying no to beef when they've stuck with us at beef prices being this high.
Yeah. So maybe for our listeners that we're experiencing these, super high prices now, how did we get here? How did we get to the high prices we're at now? Maybe, some of our listeners may not know that or understand that.
Yeah. And, for as much as we've talked about how much numbers have tightened, that's very true. But if you look at beef production, it's still historically very large. It's not as big as it was 2-3 years ago, but I mean, it's basically at a 25-year average. So we're not producing that much less beef. And then, in fact, if you look at per capita beef consumption, it's actually bigger. And this past year, it will be the biggest it's been since, I believe, 2010. So it's not that the consumer's eating less beef, so prices have to go higher. It's really because of demand. The consumer just wants our product, and with tighter cattle numbers, they've had to basically bid up. They've had to pay to pull that product through the system, but it really is because of demand.
So it's more demand driven than short cattle numbers or beef prices driven.
Yeah, it really is demand driven.
Interesting.
I mean, and I think if you think about what drives demand, there's a lot of moving pieces in it, but the economy, despite all these challenges, incomes are still really good. And if you adjust for inflation, aside from when we were juicing consumer pocketbooks during COVID with all the stimulus payments, incomes are as high as they've ever been. And that's despite, people that maybe don't feel good, and there's certainly some challenges at the lower end of the socioeconomic brackets. But all in all, the consumer's making money, and that supports beef demand. And then obviously there's the protein craze, right? Yeah. And that didn't just show up this year because of the dietary guidelines. And that changed with more protein.
Let's talk about per capita beef consumption. You said it's gone up, right? Is the number around the average American consumes 57 pounds of beef per year? Is that still the
It's about 59 pounds.
59, it's gone up.
Just a little over 59 pounds.
Yeah.
What's amazing about that is, like, if you think back 10 years, we saw sort of chicken outpacing beef. And now the numbers I see, beef is now back outpacing chicken on some of the growth rates that comes through. So, like, why is that as well? Because, like, that's the other thing. Like, if you think of any shock, it's like a shock. There could be a move to a different protein or one of these other proteins. Like, from a consumer perspective, why is beef now, like, being able to do what it does versus other proteins?
Yeah, I mean, it just seems like beef holds kind of a unique spot in consumers' diets, if you want to say. I mean, it's hard to get a chicken breast to eat the same way as a strip.
Yeah.
Right. And I think that's one thing that's just kind of set us apart. Yeah. And I think even that comes back to COVID, where I think people were locked up at home throughout the population centers, and they bought grills, they learned how to cook a steak, and at the same time our quality grade has gone through the roof, so they had a phenomenal product. And we won that return customer.
Yeah, it's a bit of that watch out, isn't it, as we move forward, where, like, chicken and pork became quite uniform, where beef has managed to keep, like, the different grades and the different price points, and, like, we actually have a product that really does eat well.
Right.
And it's a bit of a, like, let's not go produce the chicken of beef is probably what we're saying. Like, we don't want to end up there in a few years.
Yeah, we don't need to just mass produce because it's not like the 80s when people just ate beef just because that's the staple. It's like shoe leather, but we're just going to eat it anyway because that's what we do. It's an eating experience today. And so I think that's one thing that's just very fundamentally different. And what's interesting, like, you compare to pork and poultry especially, the U.S. consumer, if it's cheap, there's like no limit on how much chicken they will eat. But it's only for a price.
Yeah.
As soon as it gets expensive, they'll dial it back. But it's almost like it's not a substitute for beef. They're still going to eat X number of hamburgers
Yeah.
or X number of steaks. They're just, on the other days, they might just eat a chicken sandwich.
What's fascinating to me is the willingness to pay for the younger generation right now, right? Like the 20-year-olds, they are really willing to pay high prices for beef. And we even had a conversation. We're obviously recording in Nashville right now during NCBA. We had a conversation with one of our waitresses last night, and she said, oh yeah, I have 2 fillets sitting in my, she's 20 years old. I have 2 fillets sitting in my refrigerator at home. And she's like, it's really not too pricey. And I was like, how much did you pay for them? She's like, $40. And I was like, for many other generations, they would look at that and say, like, that's very expensive for the protein. But she was much more willing to pay for a product, and she did not grow up in eggs. So like her emotional tie to the beef industry is not there. So I just seemed refreshing to me to hear that yesterday.
Yeah.
Yeah.
It is pretty cool. I mean, I think that younger generation like that, I do think they just look at it as an experience. And it's kind of Gen Z. I mean, it's all about experiences, right? And I think that $40 fillet, I mean, she's looking at that as an experience.
Staying on the demand side is what is your sort of crystal ball look like as far as demand? Do you think it'll continue to go up? Do you think we'll level out? What are you kind of projecting there?
Yeah, what we're looking at is we think that demand will probably hit a flattening period here for a bit. If you look over time, you do see these patterns where demand makes these moves higher and then flattens out for a period, maybe on a calculated basis, the way the academics would look at demand. It probably will come back down a little bit over the next couple of years, but it's going to remain historically very strong. And I think that long-term uptrend, it's hard to fade that, I think, over the long term. But I do think with retail beef prices, they're now around $9.50 a pound is the latest USDA number. I do think that's to the price point where the consumer, they're going to start saying, I'll keep paying this, but I don't want to pay more. And so I think we're going to hit a flattening period here.
Okay.
That really depends on whether the economy sort of keeps growing and salaries keep growing, though, doesn't it? So,
Yeah.
And that's the big unknown at the moment. Is like you look at the GDP forecasts, and some of them are saying 5 to 6%, and others are back down at 2 or 3. And it's like if you end up at 5 or 6, we can probably keep driving beef.
Yeah, we probably can. I mean, it's contingent on the path of the economy
Yeah.
for certain. I mean, do we keep moving higher? I mean, do all the AI investments, does that come through in a positive way to the economy, or do we hit some roadblocks?
Yeah.
That's a big question, obviously. And the thing I come back to is that they say that economists have forecast 8 of the last 3 recessions.
yeah, they're
So
always on the negative.
We're not going to expect a recession. And if we'll see it, we know what that will mean to beef demand. It won't be positive, but we always tell folks don't count on it.
Yeah. No.
So last Friday, Cattle on Feed report came out. Let's talk about that a little bit. Anything that shocked you in there, just for the listeners, maybe they haven't read it or seen it. What did it say, and what do we do going forward?
Yeah, Jessica, we did see the latest cattle inventory report. So that annual snapshot of U.S. cattle inventories came out last Friday, and there were a couple key points that we can talk about there. First, it did show total cattle numbers did drop to the lowest since 1951. So it's still saying that we haven't expanded yet. We haven't turned the tide in terms of numbers, and in particular, the beef cow herd did come in smaller yet, which to us that was a little bit surprising. Especially as you look at how tight beef cow kills have been in the past year. To us, that did support that we would start increasing numbers. And so we're still a little bit hesitant on those trends that it reported. But I think the key message with that is that producers are just not quite yet willing to commit to expansion. And so we are just going to be slower turning the tide in terms of rebuilding. We did see a slight uptick in replacement heifer numbers. And if you think about that, we saw a few more replacements, but the cow herd was smaller. So on a percentage basis, we're actually retaining a few more heifers yet. So you are seeing the seeds being planted for expansion, but that report told us that it's just going to be slow, at least here initially, and probably for the foreseeable future. as we do start to rebuild numbers.
Calving can be rough. The calves come whether y'all are ready or not. In the rain, the snow, from a sweet mama cow or a soon-to-be burger, Breeder's got your back. Manage all your calving records in Breeder, free until fall. When your calves are getting more sleep than you are, don't waste time second-guessing yourself. Breeder's got your back. Manage all your calving records in Breeder, free until fall, when you sign up before April 30th.
So what do you attribute that to? Is it average age of ranchers not really wanting to build back that fast? Is it land that's not there or leaving beef production to? Is there anything that we can sort of look at that we might attribute that slow growth to?
Yeah, and that's a little bit, that's been surprising to a lot of folks looking at the market, right? As you think about just how strong these calf markets are, these prices are just screaming. The market's saying, I want more calves. It's saying, please rebuild inventories. We are short calves more than anything else. I think that's the signal in the marketplace. But despite record cow-calf profits, the producer's just not willing to. So you have to start asking why. Mm-hmm. And, as we talk to people, for years they've been saying, okay, yes, but what about? Mm-hmm. And there's that whole laundry list of items. Mm-hmm. Age of producer, labor, just high costs of capital, interest rates. You can talk about urban sprawl, alternative land uses. I mean, there's a lot. Another big one is just uncertainty and volatility in the markets. Mm-hmm. And boy, you could sure feel that in the past 6 months when we start talking about tweets coming around or posts on X about high retail beef prices and things like that. The market was so strong through the fall, but you really couldn't tell that, and sometimes based on attitudes, just the volatility, right?
Yeah, that early November when it just dropped and then back up on the back of a tweet.
Yeah.
It's unbelievable.
Well, and I think too, right, just a replacement heifer calf right now is living rent-free for a year and a half before she gives you something productive, right, that you can sell. So you either have the opportunity to sell her right now at a extremely high price, or you keep her and make no money on her for a year, right? And so do you want to wait that amount of time? Maybe she doesn't even have a live calf, right? There's a little bit of risk associated with that. But, I mean, do you want to take the money now when you know that the market is high? Or take a risk that in a year and a half it's going to be still as strong, So there's some obviously risk associated with that.
Yeah, and a lot of people are thinking that it's the most expensive replacement heifer they're ever going to keep.
Yeah.
Now, if the market keeps going up, it won't be. They'll be like, I can't believe I didn't keep it. But right now, that's not the way, when I speak to people, their mindset is. It's like, this is a $3,500 bred heifer that I, could have sold or could have gotten rid of, and it's going to take me a lot of calves to repay back that, especially if the market drops.
Mm-hmm.
Right. And I think there's, honestly, whether somebody's looking at retaining that heifer calf or selling her, honestly, it's hard to argue with either decision, because with that idea of demand remaining strong and a slower rebuild, I mean, prices, again, they'll roll over, but they should remain strong. And so that calf, she probably should be able to pay for herself and actually run a profit over her lifetime. But at the same time, these calf prices, I mean, it's hard to argue with selling that heifer either.
Mm-hmm. Yeah. I think as I talk to some people, they look at these heifer prices and especially if they want to buy heifers, and they're like, I'm buying a heifer at the high point, and she's got to pay for herself maybe in a down cycle. And I'm a little worried about that risk. And so, some of the guys I talk to I think the average producers feels like they're more in tune with the market sort of fluctuations versus maybe the way they were in the past. So they're like, well, I'll just wait a few years and she'll be a lot cheaper and I'll buy her then or keep her then. And so I just wonder if, some of those things, I think all the whole list is probably true, right? It's just pick your spot of what people think, right? Or what's affecting them.
Right.
And is there any, I think back to Jim's point, is there any structural changes that you see? Like just people retiring out of that, land moving to farming and not being in beef production, fences being ripped out. Have you seen any of those in the data, like underlying trends?
Yeah, on some of those, there isn't really any data around them, but others there are. And I would say, I mean, I think I guess the point that you made, Jim, it kind of depends person by person, operation to operation, or regionally. You know, in parts of the country, you have seen where fences have come out. You know, so it's a lot harder to put those fences back in if you want to run cows there. You know, the numbers on the age of producer, obviously that keeps going up. You know, and that same person, they lived through the last cycle and they remember how well that worked out. Yeah. And so there's, you know, a little bit of hesitancy about running through that again. But the labor, as you know, the producer, the main operator gets older, what do? Well, they either have to hire help. Well, and that's hard to come by and expensive.
Yeah, who wants to work weekends?
Yeah,
as well.
Yeah.
Well, and we didn't talk about, you know, some of these folks that went through a drought, and they're probably a little hesitant to build back those numbers, you know, just because when's the next one coming, right?
Yeah.
And so I think that's another potential factor in some of these things as well.
Yeah. I mean, as you talk to producers, there's a lot of people that I feel like they're making that conscious decision to just run lower stocking rates. That way it gives them more flexibility if they do come into a drought. And so you're just not looking at as many cows per acre, or, you know, your stocking density is just lower kind of as a baseline almost.
Yeah, I think so too.
So one of the things that drives price obviously is shackle space, and therefore too much of it at the moment. You know, a lot of these plants aren't running at full capacity. We've just seen one big one shut. You know, where do you think that sits moving forward? Because there's still plants being built at the moment, which is like a little crazy to me given where we're at. But like, you know, where do we think we end up there? Is there still room for plants to close, do we think, in the next while, especially if numbers are slower?
Yeah, I mean, where we're at today, we obviously still just don't have enough cattle to fill the capacity. And that was, you know, and these record packer losses. I mean, that's why, you know, we did see that capacity adjustment and see in Tyson, you know, closing the Lexington, Nebraska plant and taking Amarillo to a single shift. But even so, you know, even with those adjustments, we still have, again, just more capacity. As you look going forward, I think that there's still certainly risk that we would see more closures, but at the same time, as your point, there's this other capacity that's still slated to come online or has just recently opened up. That's just something we really won't know until we look back on it. Yeah. Unfortunately, but it still will be a tough environment for the packing sector here for a period until we start to see numbers rebound, or the other big question is the reopening of the southern border to Mexican cattle imports. But nonetheless, I think what's interesting is the packer also sees these beef demand trends.
Yep.
And I think they clearly want to be a participant in the industry as you think over the long term. I mean, this is a strong demand industry. How do they weather this near-term storm to get to the other side? And I think that's the key part. But I think as we talk about the market going forward, I think because we still should have very adequate capacity to rebuild the herd, from what we know today. Okay, with the capacity we have and that's slated to come online or keep kind of ramping up.
Yeah.
And I think that's what's very different, as your question earlier, Ian, about this cattle cycle compared to the next one, or the last one. The last time we rebuilt at the most aggressive expansion rate in the history of the industry, and we didn't have enough capacity there to meet us. And so that's why the market just underperformed for so many years and to such low levels. Well, this time around, it appears that we do have adequate packing capacity. No, as we do rebuild numbers, leverage will go back towards the packing segment. I mean, that's just how it always works. But we still should have adequate capacity.
Yeah, there's still a lot of room to grow there. And, you know, you mentioned the Mexico border. Like, where do you guys sit on when it's going to reopen? Because, you know, we've heard of screwworm cases even closer in the last week, you know, to the border. And, you know, some people are saying we just got to expect it to come in when we hit the summer. Like, you know, where do you, from all the research you do, like, where do you think we sit on reopening that border?
Yeah, I mean, with those cases moving northward, I think it is probably inevitable that we do get the screwworm at some point. But as far as the reopening to cattle imports, it is it's impossible to say.
Yeah.
Frankly, like we could see it reopen very soon, or it could be months and months and months down the road.
Yeah.
And so that's, frankly, we won't know until we have that decision and see an announcement coming from the administration. But that will be a big mover to the marketplace.
And if it is years, do you think it changes the whole dynamic, or do you think we still get those cattle?
I think whenever we do have it reopen, we'll get the vast majority of those cattle that we historically have. Historically, it'd be about 1.2 million head per year. And that's obviously a very key component to the southern supply chains, keeping those feed yards full, keeping those packing plants operating. We do believe that we will get those whenever it's reopened. But it is interesting as they have built out their feeding capacity and packing capacity in Mexico.
Yeah. That's what I always wonder. It's like, are we in a position now where they've built out packing capacity, they've built out feeding capacity, so when it reopens, those guys are making the money? But, I suppose you're right, like the cattle prices here are higher.
Yeah, price paid here.
Yeah.
And the strength of the US dollar.
Yeah.
We know the best in the beef industry watch this show, so we want to hear from you. We'll pick one listener to win this exclusive Future of Beef Yeti cooler. Follow us on Facebook or Instagram, send us your guest ideas, or just drop us a message. We'd love to hear your thoughts.
So when we talk about building back and rebuilding the herd, the question for everybody is, will we ever get over 30 million again, right? Like, is our new norm going to be fewer cows than what the norm was of the high, the last high in the cycle? What are your thoughts on that, and what do you hear out in the industry?
Yeah, that kind of 30 million question mark. That's kind of that is the number that people keep kind of coming back to and asking. And to me, I think that's probably the upper end of the range, and it's probably 2030, probably 2032 before we can get there. As you just think about that, it's a slow ship to turn, and all those structural headwinds that we talked about. Yeah, those are still going to slow the pace of expansion. So you're looking at quite a few years out there. And I do think that 30 million head mark, that's probably the upper end of the range as you just think about the number of acres that have come out of production since the last cycle high that was approaching 10 years ago at this point, or will be more than 10 years by the time we get to that high point. There's just a lot of acres that have come out of production, especially as you think about around those metropolitan areas or those mid-sized cities. We certainly see that around where our office is in Denver, for instance, or where I live in Washington. You just see those acres coming out. But at the same time, I mean, we've been able to just produce more with less too, right? And that really comes back to how big carcass weights have become too. You're just
Let's talk about that.
Yeah, that's a fun one.
Yeah, and do they? I mean, let's talk about it, because do they stay there? Like, what happens when corn goes up 30%? We've got historically low corn prices, so it's good to feed these cattle. Carcass weights have gone up, but surely one of the shocks that happens is corn. We have a drought year and corn price goes up. Yeah,
I mean, corn's cheap and should stay cheap for the foreseeable future, but I mean, it's not going to be a $3.50 commodity forever, right? Yeah. I mean, or $4.50 commodity. I mean, it will be cheaper, or it will be more expensive at some point. If you think about the market signal today, when a cost of gain is, call it $1, and fed cattle are $2.30. I mean, there's a margin for adding that to every pound. And that's not even talking about quality grade, or today's incentive to keep that pen full for the cattle feeder. But that leaves a lot of margin room to narrow that spread, and it still be more profitable to add that incremental pound. I mean, at some point we'll flatten out carcass weights for a period, but it's hard to imagine them actually coming down in a big way because of that.
Yeah. When you look at the National Weekly Summary averages, like for last week, were 945 average for the U.S. for hog carcass weights, and obviously that's an average for across the whole country. But then you look at obviously some of the shackle space in Nebraska. We got lots of guys that are coming in over 1,100 pound hog carcass weights, which is just exceptional how large they've got. Like the 25-year trend line is like 5 pounds per year increase in hot carcass weight year over year for steers and heifers. And then you look at what it's done the last 3 years, and it's just like casually in like Q1 of last year, 41 pounds heavier. It's like we're really, really feeding long, but it's the feeder is making money by doing that, right? Keeping an animal in the yard. And we know with carcass transfer, it still is increasing at the end of the feeding period. On average, you're putting still on 2 pounds of hot weight every additional day that you feed that calf. So there's really no incentive right now to feed shorter days on feed.
Right.
And I think there's probably some packing plant efficiencies with bigger carcasses too. I mean, I think they've realized that, it's probably cheaper to have fewer large carcasses come through than more smaller ones from a total amount of beef that's getting harvested. So
yeah, it does spread out costs in some ways, although there are challenges at the packing level and beyond with it too. I mean, just those are big carcasses that generally over time the packer can figure out ways to accommodate those, but it's not without some challenges getting those plants ready to work that. But then also the challenges we hear is box size. Sometimes you can't fit as many pieces per box, and the boxes get too heavy. And then there's also some issues with, really just the ribeye. Yeah, that how do you have a steak that's not 20 ounces that you can actually cut 1.5 thick. There's some challenges like that come with it.
Yeah, and another one's like then the amount of 50-50 trim, right? Because that doesn't make a burger, and so then you've got to get the tallow and you've got to melt it down, and if we think about that, like how does international trade? Because obviously we're getting a lot of 90-10s from Australia, Brazil, other places around the world. Like, how do you see the importance of international trade to support? Like, is it a threat? Should we be trying to be protectionist, or is actually a really important part to help the U.S. beef industry?
Yeah, I think the balance of trade is a very important part of our industry. I think what your point about, we're making the trim mix very fat, and at the same time, how do you make a lean point that the consumer wants? Well, you have to blend it with more lean. We don't have enough cow kills because on both the beef and dairy side, we have dropped back the number of cows that we're sending to town, and we're going to have to keep doing that if we want to rebuild the cow herd. So we almost have to bring that product in from abroad. And the other interesting point is ground beef demand, hamburger demand. We kind of talked about the high quality stuff, but ground beef demand is also through the roof. Yeah. So that's kind of sent that signal to bring in that product from abroad too.
Well, yeah, because the consumer wants a 90-10 or leaner, right? And if we used our fed cattle population, it's a 50-50 blend.
Yeah, exactly. So I think that's another key dynamic that we'll see that's kind of just a challenge with these heavy carcass weights too.
Yeah. Interesting. I was going to ask you about the import-export trade type thing and how it affects. Will it change, or what do you guys see it potentially changing in the future that might affect cattle prices positively or negatively?
Yeah, I think, well, if we do look back over our shoulder here, we can see that changes in the international dynamic, especially with the increased tariff rates that we saw, especially on Brazil, that those can introduce a lot of volatility to the market. And we can also see that as you restrict that, it does push prices higher because we have to ration the product there. As you look going forward, what's interesting, Australia and Brazil, they've been liquidating in a way. So at some point in the next couple of years, a lot of folks believe that they will have to tighten their production levels, and the U.S. will probably get what we need. If you look at imports, they tend to be kind of a relief valve. When we have adequate trim, we don't tend to import as much, and then we import it when we need it. But it'll just be interesting to see what plays out when the world is producing less beef to import. Mm-hmm. The other side that we hadn't talked about is the export side.
Right.
And, it does tend to be that you have to be a participant both ways in the market. We've seen where export demand for our product does remain outstanding, and that's even with currently being effectively shut out of China. That will be key going forward too, not just China, but other global markets, because we do produce a very unique product in terms of quality and safety that just it really is a class of its own. And I think that's just very positive long term, especially as we do start talking about that rebuild. Exports are down, but it's really just because we have less fed cattle to export, less piece count. When numbers rebuild, I'm pretty confident that we will see that global demand
continue to increase.
There's nothing greater than seeing your cattle grazing on lush green pasture.
Oh yeah, and nothing ruins that view like weeds and brush soaking up all the moisture and nutrients. Regardless of precipitation, we have to take care of our pastures. It doesn't rain grass.
The passion for cattle ranching starts early. So should the protection. Let's keep our pastures in good hands with Corteva Agriscience. To learn more, visit rangeandpasture.com.
When you look at all the forecasts, global demand for beef continues to grow for the next 30 years. It's like as people go through the economic tiers, like beef becomes a product they want to buy. And I suppose the danger is on some of that maybe is that stuff out of Brazil and Australia that we do need here for lean actually gets higher price because other countries will start wanting to buy it as well.
Yeah, we could see that too, see more competition for that.
Luckily, it's still the highest beef price in America, so I think probably win.
I did want to jump back. One other discussion I think is really interesting on the carcass weight side that we didn't hit on was we talk about the incentives to add weight, but we've also seen, I think, where we're able to do this because of the genetic improvement that we've seen in the last several years, or in the last 10, 20 years. Where the genetic potential of these cattle through the investments that the cow-calf producer has made through just buying good bulls year after year after year, we couldn't make the cattle this big if they didn't have the genetic propensity to do that. And so I think we talk about a lot of this at the feed yard side, but I think it's more the cattle feeder realizing the genetic potential of these cattle. And I think that's an amazing side of the story too.
Yeah, I think it's interesting because obviously the feeding and packing signals are making bigger, and the cow-calf ranch signals are we need these cows to be a little more efficient and need them to breed back, and they're starting to worry that the cows are getting too big. So that's sort of a conundrum right now in the industry that we have signals going different directions to try to make these cows maybe a little more moderate and functional, and still yet have the carcasses big. And so that's I think that's from a cow-calf perspective. Things are going to
terminal and maternal herds.
Yep.
Well, I was just thinking what would be cool, is to run a regression on hot weight and then birth weight of that calf, and then also cow weight, running hot carcass weight onto it. I mean, we have very little data that goes across the entire system like that, but
I mean, historically, carcass weights and mature cow weights are very highly correlated from the data that is out there.
Yeah.
And so I think that's the next challenge for the industry genetically. And it's certainly there's a lot of tools that are becoming very good at that, but to create those kind of genetic curve benders that can maintain, an adequate cow size that's not too big, that's not, eating us out of house and home, but can still produce that carcass that really performs and can still get big.
Yeah, I think, part of the limiting factor is, people may not be able to stock as many cows on the same ground because they're bigger than they historically could either. So that could be another factor that's affecting, expansion.
Yeah, I think so.
Yeah, so I've wanted to get into saying more specifically about how you run your business, and AI has been a big topic of conversation. We've even talked about it in terms of GDP. How is the AI trend and how's it changed how you actually do your job? Are you able to do reports faster now? How are you thinking about using stuff like that for predictions? You hear about stuff out of the main banking centers of what people are doing with their AI trading. Where does AI change market research? How should farmers, producers, feeders think about using AI in their daily life?
Yeah, it's a good question about how we and others are starting to use AI. Honestly, where we've adopted it is a lot of the not as exciting things. I mean, it does just help us kind of under the hood. I mean, it's a great editor, But AI can never, at this point, it can't write a forward-looking market report.
Yeah.
And really, as we think about what we do, what CattleFax really tries to do is take all of the data, all of the moving parts in the marketplace, and we know that there's a tremendous amount of sources for information out there for the producer, but we want to cut through the noise and really boil it down to what matters to that producer. It's hard for an AI to replicate that, but it does make a great editor.
Yeah, but it's an important point because like there is producers out there today that go on and ask AI to do a market report for them and not pay for CattleFax. So,
You're right.
the point you make is a really good one. Is like AI is backward looking. So if we are in a new normal, it's not going to give you the best answer.
Yeah, exactly. You can run AI models to forecast things, but it's kind of computers running on computers at that point. Yeah. And frankly, we're going to leave that to someone who's running a hedge fund,
yeah.
Or something like that. We think that the value is really in synthesizing thoughtfully the data.
Yeah, I think, which makes complete sense, because the thing that's always shocked me though is when you get one little shock on the market, the way that AI tools are reading X and Truth Social and all of these things, and then how they then trade, and like, are we seeing sort of market shocks to the futures market because of this? And like that does flow into people's pocketbooks at the end of the day.
I think it does. I mean, I think the all markets, not necessarily just cattle. I mean, as we're filming this, last Friday, gold went down 9%, silver was off 30%. I mean, it's in just a single day.
Mm-hmm.
Yeah.
And what you're seeing is, I think those AI trading algorithms they make the market just move faster, and it just makes it more volatile. It still might get to the same place at the end of the day over time, but it just makes things move faster. Yeah. And so I think that's just, to your conversation earlier about just structural changes, that's another new normal, is that across the spectrum, markets just move faster.
Yeah, it makes it hard to hedge in some of these ones. So that's for sure. Yeah, I think from my side, it's just, it's really interesting to hear how that's being adopted, because there's so much change in that space. Producers are sort of wary of it, and like, how do I adopt it? How do I use it? Like, what's it good for? There's like AI nutritionists and stuff like that are starting to pop up, and you're like, but do they actually know your cattle, or do they actually know the market? And I think it's a big danger sort of, watch out, I think, for people.
The challenge is that you need to have somebody that knows what they're doing with it. You can't just blindly slap an AI on top of something. It has to be somebody that knows nutrition, knows genetics, knows these different things, and applies the tool. And I think it's just the next iteration of tools.
Yeah.
Mm-hmm. Yeah, I think that's what we like to, for the wearables and all the technologies that are coming online, especially in the feedlot sector. It's like you still need to have the human aspect of it all to double check what the technology is telling you to do, right? Like, you still need to make a diagnosis. There still has to be a consulting veterinarian and nutritionist, and make sure that there's still the human aspect, again, because they know your cattle better than what a technology can algorithm predict right now for your cattle, right? So I think there's always that critical point to it. So in your crystal ball, Patrick, what do 5-weight calf prices look like for 2027? No, just kidding.
Yeah, it took us that long to ask that question.
Well, forget about 2026.
When should we sell our calves? Right?
No, sorry, 2026. Yeah.
Well, I'll tell you, our view of the market here going forward is that, again, we do start to run into some resistance at prices. We are towards the upper end of the range from a cattle cycle standpoint. Very strong likelihood that we are looking at calf prices that are probably below year-ago levels this coming year. But you can keep in mind, I mean, how high of a benchmark that's setting ourselves against, obviously. And then a big question mark on that is Mexico. That if we do reopen to Mexico, the market does take a notch lower, as you just add back that 1.2 million head annualized. Either way, it's going to be a strong market. It's just, a question of where exactly and how much below year ago. But still, second strongest calf market on record is what we would expect here going forward, as folks are looking at their expectations for those summer videos, or looking at getting calves priced into the fall.
Didn't know nothing greater than seeing your cattle grazing on lush green pasture.
Oh yeah, and nothing ruins that view like weeds and brush soaking up all the moisture and nutrients. Regardless of precipitation, we have to take care of our pastures. It doesn't rain grass.
The passion for cattle ranching starts early. So should the protection. Let's keep our pastures in good hands with Corteva Agriscience. To learn more, visit rangeandpasture.com.
Certainly another big question mark is what's keeping market prices so strong for calves right now is that the big surge in fed cattle values, that the cattle feeder has made outstanding money. And 2025 was a record year for closeouts. And so the cattle feeder's done well and kept chasing the calf market because of that. Mm-hmm. At some point, if the market does start underperforming, then the cattle feeder will start being more disciplined. And so that's just another risk that the cow-calf producer needs to keep in mind here going forward. But I mean, as we said, it's funny. It's kind of a double-edged sword, right? I mean, it's still an outstanding market, but strong odds it is below year-ago levels.
Thank you for that summary, and thanks for joining the Future of Beef show today. It's been a really eye-opening discussion.
Yeah, I appreciate the conversation, and thanks for having me.
Yeah, thank you.
Mm-hmm. Thanks for joining us.
Stay tuned. It's time for Ian, Jess, and I to go behind the beef. Well, it's nice to have Patrick on and get that perspective, huh?
Yeah, very insightful. I said it's again we're in Nashville. It's the beginning of February right now, and cattle inventory report came out last week. So just for the listeners to know where we're at when we're talking about the market right now. I think it's refreshing always to get a CattleFax perspective on things. You know, I think they've got a good understanding of what's going on in the industry. I mean, pretty positive outlook for what prices are going to continue to bring. Beef demand is really high. And I think that's really shows us how much the consumer likes the product that we produce, right?
Yeah, I think so. And you know, I think it's exciting. I mean, cautiously optimistic is probably the term, right?
I think you and everyone else in the beef industry.
That's right. I think we're all like, how long is this going to last, and how good's it going to be, and
how many loans can I get paid off from this?
Right.
But it's interesting though when you go. I travel a bit to Europe and Australia and places like that for our business, and you go over there and it's not quite that strong, like high protein cycle, but you can just start seeing it to come out of like the US and that movement away from processed food and all of that, and that trend really kicking in. So if you look at that, then back to the export point, like there's still demand to run, in terms of developed markets moving back towards beef as well and away from chicken and pork and things like that. So it's really interesting where we go from here. And, I probably have a different opinion. I think we might see high calf prices again, but I'm not the expert. So let's see where we end up.
Yeah, we're not going to pay attention to you. We might pay attention.
You never have. Why would you start now?
Yeah, I think the other good point too, right, was that rebuilding maybe isn't starting yet, even though we were expecting that maybe we'd see that, and then obviously just. What is the new norm once we build back, right? Is a new norm 30 million cows in the U.S., right?
Well, but for Patrick to say he didn't think we'd see that till 2032, that's a long time away to get to, and even then, that he said it was the upper limit. Now, obviously it's a crystal ball for him too, and everything he's doing is an estimated guess with a lot of background. But it's amazing to think that we can't structurally get back above that 30 million.
Yeah, well, it's interesting. I think there's going to be challenges, obviously, to getting there, right? And then the genetics are just going to continue to get better.
Yep.
And so,
do more with less.
Yeah, I think that's that's agriculture's history, right?
The long-term trend is more with less.
Yeah.
So, it's great to have him on. So
that's good.
Yeah, so people listening to this in a year's time, yes, we are.
We'll see if he's right?
In February in 2026, but
That's right. That's it for this episode of the Future of Beef show. And a big thank you to our guest for joining us and sharing their experience and insights on this topic. Hit the subscribe button for more great episodes like this one. If you want to dig deeper into what you heard today, head over to futureofbeef.com. where you'll find free resources and helpful links. Don't forget, we'll pick one listener to win this exclusive Future of Beef Yeti Cooler. Follow us on Facebook or Instagram and drop us a message for a chance to win. Until next time, keep your boots on the ground and your eyes on the future.